Good morning, guys. Welcome to this Monday, June 16th. Halfway through June already. A couple of weeks, we got July 4th coming up, and man, time flies. Anyway, the weekend was calmer than expected. It's not calm by any means in the Middle East, but it's nothing was spiraling out of control in a way which got the markets riled up. So they're expecting a lot of carnage going on there, and that's what's going on. Markets, though, it started off a little bit of reactions, and then it looked like it recovered pretty good in the overnight. And I'm just watching this thing, thinking it's surprisingly strong, I had to say. I mean, it's the fact that they started down here. I mean, when the thing starts happening on Friday, it started selling off pretty good, and overnight popped a bit to the downside, and then it went right back up here to the highs again. So, very interesting reaction. Uh, Right now, though, we have, let me see, if I forget it, Juneteenth coming up on Thursday. It's a new thing from a few years back, but June 19th, Juneteenth, that's going to be half trading day. So there's a regular close on Thursday, but Friday, or sorry, a regular close on Wednesday, then Thursday is going to be a half a trading day. So that's, yes, it's like kind of a short week today, in this week. News this week. Notwithstanding anything coming out from the Middle East in terms of the news or the Ukraine war, uh, it's primarily Fed week. So we got Fed meeting coming out starting tomorrow, and then we had the Fed announcement on Wednesday. Probably chances are they're going to leave rates as they are. Everyone wants them to drop it, but we'll see how political these guys really are. Come Wednesday afternoon. Today, though, not much news. At 8:30, we got an Empire State number come out at 8:30, and that was about it there. So not a whole lot of news today. Tomorrow, though, we get a fair amount of stuff. 8:30, we get retail sales. We have import-export prices, industrial production, housing data, and the Fed meeting begins. And on Wednesday, we get more housing data, jobless claims coming up a day earlier, and then Fed announcement at 2. And we have Juneteenth in between, and Friday is a quadruple witching Friday and leading indicators. So not, I don't think it's a ton of news coming out on Friday, but it's a little bit kind of an odd week coming up. I think what's going on right now, couple of things, excuse me, can impact the market. We have the big beautiful bill thing. That thing is going through Congress. News on that one could potentially spook the markets. We have the Iran-Israel war, and that is definitely something which can impact the markets. Depends on what happens there. Definitely oil and energy. And the Ukraine-Russia war, which we haven't heard much about for a bit now. We'll see if there's something going on in the background there, but we got a few things going on there. And then, of course, Fed announcement on Wednesday. So I'm going to start off this as a range-bound market. We have the this upper edge right there at the 60-65, and if they can trade up above that, I'm going to stay on the long side of this. So I mean, I'm starting off range-bound biases to the upside given the overnight. I would look to buy against weakness down to the 6,050s. That's about it. Thereafter, I would just go back flat, have range bound, and expected to trade in this range. In other words, still looking to buy against the support down to the 59.85, but at that point, a little bit more aggressively looking for short setups against resistance. At this point, not sure if they're going to bust through or fail. So, if they're trading the failures, what we normally do. But given that overnight, I would be as a little bit cautious to see if they're going to be able to take this out and start trading higher. We will see. But I mean, at this point, the overnight is surprisingly strong. So I would look to buy weakness down to that 6,050. Below that, I'm taking off the long bias and going back flat out range bound. I would still look to buy against the 6,040s, 25s, 15s. I got to move this guy away, but let me see. 15s. All right, so here's 15s, 6,005s. And here you have the 59.95 and 59.85s, these two support areas. If these lower areas come out, I would lean in on the short side, then we have something going on. So initially looking to buy weakness just down to that 6,050s, with a bias to the upside for retest, see if they can retest this high, maybe take it higher. And if they stay above the 6,065, so I want to stay on the long side, see how far they can take it. We have the next level really to the upside where we get good resistance is going to be, well, it's probably the attractor point here. We have a little low volume area here at 6100, a small low volume area, but then the attractor here at the 6130. That's going to be the last big attractor. Then we are making new highs. So yeah, Michael, don't start talking about Christmas again. It's getting way too close. Anyway, so low volume area here at the 6100s. They take through that one, they take that out, and that's not a very strong one, by the way. So next attractor is 6130s, and thereafter we are looking at the potential test or new highs. That's pretty spectacular, right? After a couple of months of pretty good volatility. Yes, you see, I used to have a little daily chart here. You see here this crazy daily chart. This is the April time frame, how crazy that was. And then, since mid-April, there's been a steady grind upside. It's not straight up, but a pretty steady grind right back up here towards the highs. Uh, So starting off range bound with a bias to the upside on the ES. They're going to buy weakness at 6,050. So it comes out, take off the long bias. Now, if they start taking it higher, as I said, just stay on the long side. Next resistance area is going to be up here at 6,100. So we got a little bit of range to go on the upside. And then thereafter, the attractor at 6,130. And we're looking for a resistance at that point. But at this point, looking to buy that weakness, and if this trade below it, I would just go back range bound and look to trade in this range. So that means that you're still looking to buy against the 6,040s, the 25s, the 15s, 05s, 59.95 and 59.85, with these two being the key support areas. So if they trade back into this lower range and then starts trading back up again, I would be looking for a little bit more aggressive short here against the 50s and maybe the 65s at that point. But right now, we'll see if they just can keep going and make a go out of this from the get-go. All right, so that's the ES to get started this morning. Looking at the bonds and the Nasdaq, and the bond market is. You can see that it's pretty much where we left it. Not a big reaction. There's a little bit of selling going on there on the Friday. But as you can see, we are pretty much still in this range here. So the lower edges is at 11, 16 to 20s. That's going to be the lower value edge. And we are in the 12, almost to 113. So we're right up here in this area. They've been building a little bit of value to the lower end of this range, not on the upper edge. So we'll see if that's going to implies that they may take this lower. And we'll have to just wait and see. Splitting out the S here, you can get an idea that how this mode moves down in the distribution. That's just splitting out this S right there. You can, oops, that's not the S, the N split. That's your N split. So that goes back to beginning of May. And you can see split it this way, you can see a pretty good distribution going on the downside. And you see also that the attractor right now is out here at the 11, 12, 112.25s, and we are trading right at it. So I would just start off range bound on the bonds, but keep the slight bias to the downside, given that they were up here for a bit, and now they've been pretty much been fading since Friday. So starting off with a slight bias to the downside to see if you can retest that 23, 24, potentially take it lower. So, so looking to sell against the 113.02 and 113.10s for rotations back down, about 113.10 and go back, take off that short bias and go back range bound. So that's the bonds. They are at a pretty good attractor. And this could just be end up being a range bound day. But I'm going to, given the retracement from Friday and the continuation in the overnight, I'm going to start with a slight bias to the downside. And let's see if they can keep that going to the downside. That just means lower prices means higher yields. So that's not necessarily something we absolutely want. If you have a big savings account, you do, but it's it's like it's a negative impact on small business lending. That's kind of what the bottom line is with higher rates. On the Nasdaq, also pretty good retracement coming up in the overnight, right back up here again. And look at how close Nasdaq is to the all-time highs. They're right here at the 22,300s. We are right here at the 22,000. We are above it right now. And I think Nasdaq looks like they're on fire here now to potentially take this higher. So again, looking to buy weakness and against the 22,000s and the 21,950s for rotations back up. Below 950s, 960s here. Taking off the long bias, going back range bound. I think you're back in that lower range again. And if they keep going, I mean, I don't see this. There's a small attractor at the 180s, but I think this is the last good resistance area before we really start can challenge the highs. So Nasdaq is all the way back up, ready to extend to the upside. That is pretty spectacular. So anyway, so that's where we are. Traded from the start off range bound with a bias to the upside. Look to buy against that 22,000s and the 21,950 to 960s. Rotations back up. And I'm not going to worry about the short side until this lower area, the 700s come out. That's going to worry about the short side at that point. A couple of times with all the crap happening on Friday, they still held that support area. That was pretty good because that was getting pretty gnarly for a bit. So that's how we get started. And if they trade back below that 960, still looking to buy weakness against the against the 900s, 840s, 800s, down to that 750 and the 700s. These two being the key support areas. So the 700s and 750 comes out, stay on the short side. We are heading lower at that point. But the again, Friday, you see that the Friday probably rolled over to the September expiration, and then we got a pretty good knockdown on the war started, and then we're back up again, and then back down, and pretty good. I mean, for being for the Middle East blowing up, the market it looks like it's just shrugging shrugging its shoulders. It's kind of surprising, but that's how it is. That's how the market, and we usually get that initial reaction, then pretty much nothing after that. Unless there is something which really drags the US into it, then it would be a different thing. But right now, the market is not reacting to it. On gold, flight to safety, of course, that's the war effect. You can tell gold was anticipating something. You see how they were trading higher. So this whole thing started back here, and this is back at June 10th. So June 10th already, they started like a few days earlier, gold started spiking. And you can tell it's always something, gold are spiking, you cannot quite know what it's doing. And it's not an immediate reaction to something. You kind of have to take a step back. There's always something going on somewhere. And this time, it could very well have been that impending war. Someone had an inkling that it was going to start happening. Anyway, so on gold, retracing pretty good in the overnight. I would still look to buy weakness until they take out this volume edge at the 3400s. So they trade below that one. I'm taking off the long bias. So looking to buy weakness, 3426s, this is the 3420s, 15s, down to the 3408s for rotations back up. Now, this could be a nice short retracement trade. If they take out this low at the 34.26, if you get a good trade location for a short, it could be a nice retracement trade all the way down to test this volume edge. The support could hold anywhere on the way down, but if you're in this trade early, that could be a nice short setup for gold. And that would be as a technical retracement trade to reverse retest that 34.10 area. Right, it's going to be this lower edge. And if that comes out, I think they're right back in this lower range again. So that's gold starting off with a slight bias to the upside. Still looking to buy weakness, but just going to put that out there. That short could potentially develop, and if it does, could be a nice run to the downside. And on the way up, looking for shorts against the 40s, the 52s, 61s and the 68s, all with a bit of caution. This is an area that hasn't built a whole lot of volume. There's a pretty good edge here at the 45s. And so I would say to start trading above that 45 level, I would just be back on the long side in a big way. So at this point, looking for short against the 40s and the 53s. Above that 53 area, I think they are going to be running this higher. So I'm not going to be super aggressive on the shorts up above that, but they could still develop. So that's kind of watch for it. And then finally, oil. And oil is the one which is going to be they're getting pretty volatile here. They were up, bouncing pretty good. And as you can tell, this reaction here is well over. It's an overreaction, I think, given that there's not any supply issues on oil or anything like that. But it could be. Oil could certainly spike and stay up here if the Strait of Hormuz or something like that goes to shit. Then and that's a technical term because you never know if the Iranians going to try to shut down the strait. That's going to be a different story coming out of that. Uh, that would keep oil high. Then you can the Saudis and everyone else have a hard time exporting oil, but it's volatile and treacherous to trade. I would start off from the long side. Look to buy weakness at the against the 71.80s down to that 71.40s, maybe down to that 70.80 support areas. But that's just a reverse retest at this point. If they take them out, it could be a nice retracement trade all the way back here to the 66s. But I think oil is going to be volatile and very unpredictable right now going for the next period of time until we know where that conflict is heading. And it looks like they targeted infrastructure, energy infrastructure, but domestic energy infrastructure over the weekend. So they're not if the conflict ends, they could certainly resume oil production fairly quickly, at least for now. We'll see. If that changes and they start hitting some of these ports on oil facilities, they're just going to screw out their potential future exports. Yeah, I think the prices may stay higher for at least for a little bit longer. I think though, and then just as I said before, everyone else is producing oil and gas right now. There's no environmental mandate about that, which is artificially set to not do it. So I think the price is going to come down no matter what. It's just going to be this uncertainty in the Middle East going to keep it higher. So that's just a risk premium you're looking at. And when that starts going away, you'll see things come down pretty quick. But at this point, looking to buy against these first three areas of support. Not going to be very aggressive on the short side, but still short opportunities at the 72.50s, 73s, 73.50s, 74s, up to the 74.70. Then after that, you start getting into crazy land. I mean, this is like super light up here, so I'm not going to engage that. But if they start taking out this 74 level, start trading above it, I would just be back on the long side in a big way. I think at that point, you may have one of those squeezes to the upside again. And that would just be something happening in the Middle East. And since we don't have first-hand information about it, I would just be really cautious trading oil right now. There's definitely volatility there now if you like to trade that. So suppose the GPS jamming going on right now in the Middle East, you said? I would expect. But anyway, or is GPS jamming in the Strait of Hormuz, you mean? Yeah, maybe. Yeah, it would not be surprising. So trade oil from the long side. Be aware of a lot of volatility there. Trade gold from the long side. Watch that lower volume edge at 34.08. But that's kind of oil and gold. Both of them are going to be pretty darn volatile. So if you trade them, just be on your toes. And look at that. The ES took out resistance and are heading up, hanging above 65. So yeah, okay, let's stay on the long side and see how far they can take it. Same story with Nasdaq, also trading higher. Go figure. The market is trading higher against all that uncertainty, but okay. We'll trade what we see. All right, guys. So short week coming up. not much news. We only have that Empire State Manufacturing coming out at 8:30. So I'm gonna say good trading, guys, and let's go at it. Yeah, the trading week develops. All right, guys. You have a well, we'll wrap it there. I'll see you back at 11:30.